What's going on, guys? How are you? How are you doing? Today we want to show you the best entry strategy that you can use on derivative indices, and this is step index that you are looking for. If you're looking for a very good broker to trade these indices, then look no further than derivative, which is the only broker that actually offer these indices. The links and the description down below for you to register, fund, and start trading. So we are looking at this particular step index chart here on the H1, and what we want to see is to understand what are the points of interest that you can see on this particular chart. Then after identifying those points of interest, we are going to look at the entries on the M15, and we are going to look at the specific pattern that you need to follow for you to trade with this entry strategy that I'm going to show you. So from this particular chart, we are showing order blocks and order blocks and fair value gaps. So you see there are fair value gaps that are marked on this one with this yellow box, as you can see. So we have order blocks here, we have fair value gap, order blocks, and fair value gaps as we go. So this is step index, and this is another fair value gap that you can see and that you can use as you are trading. So with that being said, and with our points of interest lined out, we can go to the M15 now and try to see how we can get an entry using this particular method. So what you need to see on the M15 is simple. Remember, we are going to be looking at this as the simplest entry strategy you have heard of. So when price is moving down, right, to the point of interest, so we are considering this here, and we want to see how price was moving down to this yellow zone and how we could have taken advantage of this pattern that I'm talking about to go up. So this pattern is simple. What you need to do is understand that when price gets into the yellow zone, you are looking for price to break minor structures. So when you say minor structures, okay, let me just explain what a minor structure is. Let's look at this particular move here, where you are going to be seeing that price is forming this major high, as you can see. So we have a major high here, right? And we have a major high here, another major high, another major high. So when you say minor structures, we are looking at the structures that are happening down here inside inside those majors, like these ones, right? So if we go into this area where we are looking at and try to get the minor structure here, you clearly see that we have these highs, right? And in this area, what are we looking for? We're just looking for a candle close above these minor highs that you can see here. So it means that when we have identified that, we are going to be looking at getting our entry price at this particular zone after this green candle is printed and is up, right? So that's what you are looking for. Remember, number one, we look for what? We look for the point of interest on the on the H1. After looking for that, we go to the M15, and we're going to be looking for what? We're going to be looking for the break of a minor structure in the in the order block, and we're going to be looking for a candle close above that above that break. Then we get our entry as soon as the candle closes, and we are going to put our stop loss just below the structure, as you can see, and you are going to be targeting what? We're going to be targeting the next high, as you can see. So it's either you target this high or you target the next minor high, which is this one, which is what I would target, right? So if you are looking in this area here, what do you see? You see that we have minor structure. So in this case, where is our structure? Our structure is here. So this is the high that we want price to that we want price to break, and the break came where? So let's just draw this accurately so that you can see where we had a break here. So after this candle closed above this red line, as you can see, it's very close, but it closed above the above the high. As you can see, we would have entered our buy position at this particular zone at the latest, and our stop loss is going to go just below below the structure, and our take profit is going at the next at the next high, as you can see. So this is how you can take advantage of of the H1 and the M15 when you are trading an index like step index, as you can see in this area. So let's look at this particular one. So this is an order block from the H1, as you can see. So what are we doing? We're looking for a what? For a minor structure, and we're looking for a break of that what, or a break of that low. As in this case, we have what? We have this structure as our what? Is our minor structure that we are looking for, and we are looking for what we call a change of structure loosely. But remember, we are not looking for those lows like this where you are going to be seeing price breaking like this. So in other words, we are looking like for the break of structure on the H1, but we are doing it on the what? On the M15. So when you do that, you see that this purple line represents what we want. So where are we going to get our entry? Our entry is going to be after the close of this sort of this black candle, as you can see. So this black candle closes here, you get your entry, sell, and your stop loss is going above there. So this is how you are going. And remember, you are going to go for the next what? For the next low, as is in this picture, right? Let's go for the next example. What do you see in this area? You can pause the video right now and try to get the what? The minor structure in this what? In this area. And if you can, show me how you are doing, and you can just mention the price in the comment section down below where you are seeing that break, and we can continue the discussion. So from what I'm seeing here, the minor structure break is right here. So the minor structure break that I'm seeing is right here. Let me just mark this low. So this is the low that we are looking for, right? After this low is what is marked like this. What do? Wait for a price that is going to break that minor structure, right? Remember, what is guiding us is the what? Is the order block from the what? From the H1. So after this break, we are going to be what? We are going to be looking for what? For a candle close. So this is the break, right? At this particular zone. So this is the break at that particular price. So if this is the price that you had tabbed in the comment section down below, then you were right. So after that, what do? We wait for this black candle that you can see. After it closes there, that is our entry. So we enter our sell position at this particular zone. Then we put our stop loss above the structure, and we are going to be going for the what? For the next low. So it's either this low, or we are going to go for what? For this particular low. So this is how we are doing it. And remember, this is a what? This is a fair value gap from the what? From the H1. As you can see, this is the fair value gap. And what are we doing? We are looking for the what? For the break of a minor structure, as you can see. So this is the minor structure. Price breaks, and where is your entry going to be? Your entry is going to be after price breaks that particular zone around here. So if this is something that you don't want to be involved in, because the close is what? Is right at the line, and the low is down here. So you might be looking for what? For entering at this particular zone after this candle. But as you can see, you can clearly see that this candle is too big for you to what? To put your stop loss here and your entry at this particular zone. So what do? You can wait for price to retrace back to what? To this red line. That is your what? Your break of structure of that minor structure that we are looking at, right? So you can wait for price to get back here, and you get a very beautiful entry. And what are you doing after getting your entry at the red line? You are looking for the next low as your what? As your take profit. So let's look at another example here, and we'll look at the last one before that. So this is a bit confusing if you are new to this chart. So what do you do in this area? In this area, it's very simple. Remember, you are looking for what? For a break above a what? A structure. So you choose a structure that is clear to your eyes. So this is something that I'm seeing here. This is the structure that I'm seeing. So after this structure, what do you see? See that price breaks here. And what does price do at this particular zone? That is where your buy is going to be after this candle closes, and your stop loss is going below the structure, as you can see. So this are danced around at your what? At your entry position, but finally moved, and this is what you are going to do when you are choosing your what? Your take profit. So with that being said, let's look at the last example here and try to see how we could have entered this particular one. As you can see, so in this area, what do you see? As price gets to the what? To the order block right here, what is the structure that you are looking for, or the structure that you are looking for price to break? The structure is clearly here, right? So this is the structure, right? So this structure that you are seeing, it started at this particular zone, right? So this is the structure that you want price to break. But if you are looking at this clearly, you can clearly see that as price is retracing back to this break, as we are waiting for the break here, price is just throwing pins to that particular line. So as price is doing that, you will be waiting for price to actually break, right? So where is the break? The break actually came after this after this candle closed. So this is what you are going to do, and you're going to enter your buy position after this break at this particular zone, right? And after doing that, your stop loss is going below there, and you were going to go for the next high, which is this one, or you're going to go for this one, depending on how you want to trading and depending on how much money you have in your account. So guys, this is what I wanted to show you on entries that you should be using on volatility indices, and this is step index. And if you don't have an account to trade this particular one, so you can get an account with the links in the description down below. After getting your account, you can fund and start trading. And don't forget to join our Telegram channel for signals, free signals, so that you can trade and grow your account faster. This is Shocks, and I'm out.